Non-formal applications. And out of
Working capital. All right, welcome everyone. Welcome to another edition of KR webinar series. Good morning, Elvis. Good morning, Eniton. Good morning, Gideon. Good morning, Asuku. Good morning, Abdul Basit. Good morning, Bukola. Good morning, David. Good morning, Ene. Good morning, Favor. Good morning, Anna. Good morning, Mem. Good morning, Mojisola. Good morning. Good morning to every one of us. So welcome to another edition of KR webinar series. Today, I'll be talking about HR Essential 2.0, understanding your statutory obligation. So these are the objectives for this webinar. So we are to understand key statutory obligations for HR and businesses in Nigeria. We are understanding like the processes and gain insight into law, agencies, and penalty associated with non-compliance. So basically, this is an objective of what we'll be talking about today. So yes, so we'll be talking about pension contribution, industrial training funds, NSITF, pay as you earn, value added tax, annual return, and then annual financial filing. So during the course of this webinar, we would implore you to please mute your mic if you are not talking. Like right now, somebody is talking, you are muted, so please mute your microphone so that you won't distract others and you won't distract the facilitators that will be taking today's webinar. All right, so with us, we have our first speaker, Adaobi. Adaobi is a seasoned human resource professional with a decade of experience in talent acquisition, systems executive recruitment, and the likes. Her career journey spans from roles at Mobile Oil and Gas, Gratitude India, and Ideas Experience Solution. So Adaobi is she's vastly experienced, and yeah, you have like a 20 minutes journey with her as she takes us on this webinar. And again, our second facilitator, we have Nsika Udo. Nsika Udo is a seasoned finance professional with extensive experience in accounting, financial reporting, taxation compliance, and risk analysis. He's currently serving as the finance manager at Kimberly Ryan. So Udo has also played a pivotal role in driving financial strategy, overseeing audits, and optimizing cash flow management. Udo is a detail-oriented, result-driven professional with excellent communication skills and a passion for continuous learning. So these are our facilitators for today. Trust me, you are in good hands and you have like a lot to take home from this session. So without taking much of our time, I would be calling on the first speaker to take the floor. So can you please welcome Adaobi Okeke as she takes the first session of this webinar. Thank you. My name remains Adedayo Odurebi, and I'm representing Kimberly Ryan. Thank you.
Okay, thank you very much, Dayo. Good morning, everyone, and thank you for being here. So just to buttress more on what Dayo said, I'll be giving a quick and practical summary of the first part of our webinar. I believe that some of us here, we're actually here for the 1.0 edition, and this is more like the 2.0 edition of the webinar. So this is something that actually cuts across HR and finance teams, especially. I know that professionals here, mostly in HR and finance. So what's an overview of the statutory obligations? Our objective is actually to simplify what these obligations are and why they matter. Also, how we can stay ahead of them as responsible employers. So these are very important for our business operations. This takes us to statutory obligations and what are statutory obligations. So statutory obligations are more like the legal duties every employer must fulfill. And this includes the pension, the payee, which is our tax, NSITF, and our ITF. So let's start with the pension contribution, which is overseen by the PENCOM. So employers are actually required to contribute 10% and employees contribute 8%, totaling 18% of monthly salaries of employees. And this must be remitted on the 7th day after payment of salaries. In reality, many companies actually either delay payments, or submit schedules and they make errors in this late, especially when staff change their PFA, which is their pension funds administration. That's why PENCOM updated its regulation in 2024. And now this is actually, let's just say it used to be a routine job, but now I think now HR and finance team now work hand in hand to ensure that things are actually in place and done properly. So today, PFAs are no longer actually just passive custodians of PENCOM accounts. They are actively monitoring employers' compliance. They check if the remittances match the submitted schedule, and if there is actually a red flag from the employer's end, they report to PENCOM. Now, reason being that PENCOM actually updated their regulations in 2024. In recent years, we saw that a number of public sector employees, especially in some state ministries, actually, when they retire, they only discover that their pension balances were either incomplete or completely missing. So that's why you see a lot of retirees, especially from government organization or private organization, thereby come to companies after they've left for a long time, coming to the company to ask for their PENCOM, and they come to the HR. Deductions. Is it okay? No. I'm sorry, I don't know if it's if you can all hear me. Can you all hear me? Sorry. Okay.
I can hear you.
All right, thank you, Vivian. So where I stopped, in recent years, we saw that a number of public sector employees, especially in some state ministries, they retire only for them to discover that their pension balances were either incomplete or completely missing. And these deductions were actually made from their salaries over the years. But because of the remittances weren't submitted or schedules weren't actually uploaded correctly on time, the money never reached their RSA. So this caused some pushback, and in response, PENCOM had to tighten their process in 2024. Now, not every employer is expected to upload accurate. All employers are actually expected to upload accurate schedules in real time and also show proof of payment for their employees. Now, with this new PENCOM Act, I think is quite easier and straightforward for HR people and then the finance team to also work hand in hand to ensure that things are done properly. Especially when new employees come into the organization, you get the right details, ensure that everything is in line. With this said, I'm moving on to ITF. So for ITF, let's say for ITF, I know you know that if you're keeping up with your remittances in ITF, you can actually get 50% of the training reimbursement. So if your company has 5+ staff or 50 million annual turnover, you must contribute at least 1% of your total annual payroll to ITF. It qualifies actually your organization to claim back their 50% of approved training costs. Now, remember, no contribution to ITF, you get no reimbursement. So many companies actually miss out on this. And then I wonder why some people actually complain that L&D budgets are actually tight. It's actually a small step to bring value back to the business. So it's very important that HR, since we are trying to also cut costs, we can also look at creating values and giving values to our employees, alongside speaking to the management in the management arm that we can also cut costs while trying to train our employees. Moving on to NSITF. So NSITF is the Employee Compensation Scheme, and this is actually governed by the Employee Compensation Act. Every employer is expected to contribute 1% total monthly pay of their monthly payroll to cover workplace injury, it can be death or disabilities. And this is actually the type of obligation most staff don't talk about until something happens, And in this moment, the company's compliance record makes all the difference. Then for payee, which is a tax, we deduct from employee salary. The rates for payee is actually from 7% to 24%, depending on the income of the employees. And we remit this to the State Internal Revenue Service, which is IRS, on the 10th of every month. So it's not just about remitting the money. You must also submit, your monthly schedules, file your form for half one annually, and then track the TCC request, which is why it's also important that when employees join the organization and you are doing your onboarding process is going on, you have to ensure that you get the necessary details of the employee. And for employees that don't have their TCC available at that point in time, you have to ensure that you get them registered. I would just like to ask a question. I know a lot of us have actually gone through statutory process and all of that. So how many of us have ever had to say, please give us a few more days for our TCC because of a delay in payee filing? If you've ever experienced such, you can actually just indicate by raising up your hand. I think that'll be fine. All right, I believe, okay. So now, that's the summary of statutory obligations for HR and from the HR arm and the regulatory lens. But what about the cost implication, budgeting, the actual documentation for audit readiness? So to take us deeper into that, I would now hand over to our head of finance, who will walk us through what this obligation means in numbers, the processes, and how to manage them without chaos. So over to you, Nsika.
Okay, good morning, everyone. Welcome back to Understanding Your Statutory 2.0. So in this section, I'm going to be running us through the process at which we can use to register, make payments, and everything, or every process that involves most of these statutory payment that we have been talking about. And the first one we are going to start with pension contribution. So for pension, as soon as you register your company, and the first thing you to do is to register with PENCOM so that you can be able to pay pension. So for you to even start, this first thing is to register with PENCOM. And when you register with PENCOM, they will give you a PEN number. We call it pension registration number. So you'll be given that. The next step is to employee enrollment. So you need to guide your employees to open a retirement savings account with RSA. We have the different types of RSA, which is we have Stanbic, we have Access Pension. There are different types, so they can make their choice. They are not being forced to register with anyone, but make their choice. And then after that, you collect and maintain the RSA pin for all staff. Once they have registered and have their RSA pin, so it is now the duty of the HRO or finance person, depending on the organization structure for salary payroll payment. So you will keep it with you. Then monthly payroll calculation, as Adobe has rightly said in the other slides, employee is 8% of monthly emolument as their contribution, while the employer is minimum of 10%. So it means for the employer, they can go more than 10%, but the minimum is 10%. They can't contribute less than 10%. And then the remittance process is as simple. Before now, it used to be a direct transfer to the PFA. So you send the money directly to the PFA and then generate a schedule and send to the PFA. So the PFA gets to debit individual accounts. But currently, because of the new PENCOM mandate that was done, so right now, they remit through what we call a central processing payment system, which was authorized by CBN. It's called Payment Solution Service Provider. There is PayPen, there is some other one, but mostly the one that people really know is PayPen. What PayPen does for you is, if you have, it helps you validate the PIN, it helps you ensure that the employees are being credited immediately. So there is no delay again, like before. When you send schedule to the PFA, they might not treat it, or sometimes they get to find that the PIN is not correct. They will drop the money in their suspend account. But now, once you want to pay and you upload the schedule on the platform, it automatically validates those pins. So the ones that are not correct, you already know that it's not correct. You can either take it out before you proceed. So that's that for the remittance. And then for the timeline for contribution, of course, 7 days after the payment of salary. So once you make your salary payment, you are entitled to remit pension 7 days after. And so for this new process, you don't need to send proof of payment because, of course, you do it from the platform. You don't need to send any proof of payment. So, but you need to keep once you make payment, the register email, a receipt will be sent there. So you need to keep record of those receipts in case you have to submit it for audit compliance and so on. So penalty for late payment is 2% interest per month on the outstanding amounts payable by the employer, of course. And then at every yearly end, you have the right to file annual pension contribution. That means you report all the pension that you have contributed for the year and report it to PENCOM. So
My friend.
please, can you kindly mute your mic, please? Okay. Okay. So the next one is Industrial Training Fund, ITF. So for ITF, the first thing to do is, of course, once you have registered your company, the first thing to do is to register with ITF. For you to be able to pay, you have to have employee, up to 5 employees, or you have a turnover of 50 million or more. So it means even if you don't have 5 employees, if you have your your turnover is up to 50 million, you are entitled to remit ITF. The calculation of ITF is, of course, 1% of the payroll annual payment. And this involves salaries, wages, bonus, and every allowance. I know some of us, we are corporate of it. We don't have some other bonuses and wages, but ITF is supposed to be 1% of everything on payroll, both for bonus, for wages, and every other thing. The payment process currently, ITF has a platform that's every month you go there to, if it depends on when your time for payment. Some people can pay monthly, some people do quarterly, some people do yearly. But if you know you don't want to owe so much liability, the advice is for you to pay monthly. So once you have prepared your schedule and determine the amount you want to pay, go to the portal, fill in the total amount you are paying, generate what we call RRR for payment. That's using remitter. So you can pay through your bank app. Once you get your RRR, you can pay through any means. You can take it to remitter, click on remitter, use your bank to pay, use direct transfer to pay, or any other transfer, a payment method that you would see in remitter. Then filing of annual return and submit the ITF form 7. So for that, all you need is the total schedule for the whole year, all the employees that you have paid ITF for, you put them and then attach all the payment receipt that you have paid, and then you file it with the ITF. Remittance claim, if you have conducted approved training, so for you to be entitled to reimbursement for training for ITF, you have to submit documentation, including training details, receipts, attendance, and certificates. You may be reimbursed up to 50% of training costs incurred. So ITF is about training. So it means in your organization, if you are a compliance for ITF, if you have done training for the year to your employee, you are entitled for up to 50% reimbursement as far as you are able to provide receipt, attendance, and certificate that you did training in that year. So record keeping, retain all payment received. Of course, I mentioned it before. Keep your payment receipt, file return, and then correspondent with ITF. Ensure you communicate with your account officer in ITF to ensure that everything is done properly, so that at the end of the year, you won't have to start running etaskata. And then they always do audit. So you need to keep those records also for audit purpose, especially in future for future verification. Then penalty for non-compliance. The FAR attracts financial penalty, loss of access to ITF. Of course, penalty for every government non-payment is like 21% of the actual. So what they would do is every month that you did not pay for, so you pay the actual amount and then 21% penalty for late payments. So the next one is NSITF. It's almost the same process as ITF. So you register with NSITF, which is, and then you compute the monthly contribution. Contribution rate is 1% of total monthly payroll, including basic salary, housing, transportation, and bonuses. It's the same thing like the ITF. So if we were not doing the right thing, after this, you should go and be doing the right thing. Then for remittance of funds, it's simple. As far as you have your registration number, go to remitter, then from remitter, you will see where you have pay bills. From there, you can just type in NSITF, it will pop you up. You fill the necessary form, fill the amount you are paying, then generate a haro, and then from there you can make your payments through that. You can make it through the bank transfer, you can print it out and go and pay physically in the bank. You can use PayStar where you generate payment account number and then you transfer. Once you transfer, you generate payment receipt automatically for you. Filing of claim, of course, keep all your documents so that you can be filing of claim, sorry, when applicable. If a staff member experienced a workplace injury, so ITF is for you to be able to claim if your staff has injury, disability, or death. Fill and submit the appropriate compensation claim forms, including supporting medical report. Very important. You have to submit the medical report of that employee and then proof of incident. So if it's a photo that has been taken when that incident happened, that needs to also be submitted. So NSITF will assess and process the claim under the Employee Compensation Act 2010. So the fifth one is to maintain accurate record. Accurate record is very, very important in all this, because without that, you won't be able to make your claim. And then without that, if they come for audit and you don't have you cannot provide your receipts and your schedules, of course, you need to repay those funds because there is no proof that you make payment. So penalty for non-compliance is the same thing. You pay fine and you pay penalty. The same 21% is a government initiative, so it's 21%. And sometimes if you are not compliant with any of this, legal action will be taken against you. Also, you cannot, if anything happened to your employee, you cannot claim any access. I mean, you will be denied access for any form of claim for the accident or anything that happens to your employee. So pay as you earn. So of course you need to register with the relevant state internal revenue service. For Lagos State is LIRS, there are others. So you register with every one of them if you have an employee in that state. So the bone of this contention here is that you have to even have employee in a particular state for you to be able to pay payee in that state. So then when you make your registration, you obtain a tax identification number, if not already available. You ensure that your employee are also registered. So individual has to have their tax TIN. And then for you to understand how the tax ban work, so the tax ban is applied on 7% of taxable income. That means before you arrive at taxable income, you will have taken out your pension, your consolidated relief allowance will have been deducted before we arrive at taxable income. So the first one is 7% of 300, the first 300 from your taxable income. Second one is 11% of same 300. So if your taxable income is more than 300, that means maybe up to 600. So it means you will be charged 7% on the first 300, 11% on the second 300. If your taxable income is more than 600, that means you go to the next level. Let's assume you have a taxable income of 700,000. It means first 300 will be charged 7%. Second 300 you will charge 11%, and that's 100,000 that is remaining. you'll be charged 11%. So it goes on and on till you get to where you have the max, which is 21% for 1.6 to 3.2. Then if your income is above 3.2 million, it means the remaining part of that balance, you will be charged 24%. So that is the amount you are going to pay as tax for the month. So of course, this is annually. So divided by 12, you pay for 1 month. Monthly deduction and remittance. So payee is deducted from payroll. Of course, we have where people that are info business that does direct assessment. That means you declare your income and file by yourself. Declare your income and then file and pay tax. But for companies, it's being deducted from the payroll and it is expected to be remitted on or before the 10th of the following month. So payment is done on or before the 10th of every month. Designated, the way payment is being done for Lagos State, I know once you file using their portal, you generate a payment invoice and then you can pay through the bank. Or if you have the account details, you can do a transfer to the account number and then the bill that was generated, the bill always have a bill number, so you submit it and then it will be posted to your account. So that's how it's being remitted here. For other states, you can, if you have the, I think, I know most of the banks have the account details, so you can do transfer to the account and then generate the schedule and share it with the relevant state internal revenue service for other states. So, okay, so I already said this, monthly, file monthly, of course, you generate, once you file, you generate the receipt and then you make your payment. Submit monthly payee schedule to these are all the same thing. So in that, before you file, of course, you have your schedule which contains the name of the employees, their gross income, and then the payee deductions and net pay. So that's already contained in the schedule before you even start your filing. Annual tax returns, of course, in every beginning of the year, I think most of us normally see it, a memo will be sent by each relevant state internal revenue service reminding us to file our payee before January 31st of the year. It attracts penalty if you don't file before that. So we call it employee annual returns. So you fill a form H1, and then for Lagos State, you upload it on their portal to show that this is the amount that in those, before filing, you will have all your payment received for the year. So if you have a withholding tax and every other tax you have paid to the to Lagos State or to the state internal revenue service, you have to have the payment received and the schedule that you make the payment with. So once you do that, you upload it on their platform, and that's where it ends. There's no payment because you have already been paid for. So the only issue with that is that if, let's assume, all your filings were up to 3 million and you paid 2 million, so and you have filed for 3 million in the system will automatically show you that you are still owing for a particular amount. So once that is done, you can apply for tax clearance certificate for your employees and then ensure that their payee is fully remitted, request the certificate from the. So once you have done the right thing, you are free to apply for the employee tax clearance certificates. Okay, so for VAT, the first thing is register for VAT. So when you register, as soon as you have a company, you register your company, you have to register for VAT. It's very compulsory because you cannot charge anybody VAT before having, without having a VAT registration number. There's no way you can charge anybody VAT. If you invoice anybody and then you put in VAT and you are not registered, how are you going to remit? So first thing is to register for VAT and then charge VAT on goods and services. So charges for VAT is 7.5% as of now. For people that deals with goods and services, you need to have a record of the purchases you have made, because of course, when you make purchases, when you buy items, you will be charged VAT by your vendor, which you have paid to them. That is called input VAT. So you are being charged that VAT. And then when you are also selling your goods, you have to charge VAT, which is called output VAT. So at the end of the month, what you do is to file for that VAT. I think currently we file with Tax Promas. So if you are not registered on Tax Promas, you need to go and register with FIRS. So once you have your revenue, the VAT you have charged to your customers. So the next thing is for you to file for the VAT you have also paid to your either your suppliers or your vendor or anybody that does something for you. So at the end of the day, the net of the outputs and the input VAT is what you are paying. So if you deal with selling of goods and services, goods, basically, this apply to you a lot because you have to have output VAT and input VAT. Then for people that are into the service business, VAT is in two ways. I think around 2023, CBN came up with a mandate that every banks and every oil company organization should deduct VAT directly. So if you do invoice to any banks or any oil company and put in VAT, you won't be paid. So they will deduct that VAT and remit it on your behalf. Your duty or responsibility is for you to ask for the payment receipt, because when you are reporting, you are going to report your own revenue. It means for FRS, you are supposed to pay VAT on those revenue you have reported. So in this case, since the bank have already deducted, they didn't pay it to you, the oil company has already deducted, they didn't pay for you, they have withheld it. So you have to have an evidence to show that they have collected it. So receive it on their behalf. So once that is done, it's for you to proceed and file. You file your file for it on Tax Promat. It's being filed on Tax Promat, and then you proceed to make payments. You can make payment through Tax Promat. You can generate it and take it to the bank. Generate through remitter and take it to the bank to make payment. There is also an avenue for you to be able to do direct transfer for VAT payment. Annual returns. So for process for annual returns, basically registered with the CAC, update company records containing of the shareholders, the directors, and their addresses. Complete the annual return form using the CAC online platform or physical form. So for now, I think mostly is the online platform that works. So pay the prescribed fee. I think it's like 5,000 for small companies, more for the others. And then file not later than the 30th June each year for the preceding financial year. So it means for 2024, before the 30th of this June, you should have filed for annual returns. Obtain official acknowledgement copy or confirmation from CAC that you have filed, and then maintain evidence of submission for compliance review. Annual financial filing. So the first thing for annual financial filing, of course, filing is done 6 months after every financial year end. So it means if your company financial year end is ending in December, this June is your filing month. It's the last month you are allowed to file. You can still file in July, but it's just that you pay penalty. So the first thing to do is to engage a licensed auditor to prepare an audited financial statement for you, and then including that financial statement would include your comprehensive income statement, balance sheet. We call it financial position as of now, and then cash flow, and then you obtain a tax clearance certificate from IRS. It will be done after your filing. This will be done after your filing, so you can apply for your TCC after filing. I think now what they do is when you finish filing on tax promas, basically for filing annual financial filing, it's tax promas that is being used in operation now. So no manual filing anywhere. You go there, put in your revenue, fill in everything that is necessary to be filled, and then you submit. So after submitting, you will pay your CIT, the company income tax. Of course, if you have a withholding tax that is can cover up your CIT, it's fine. You just use your withholding tax to pay. But if you don't have withholding tax amount that can cover it, it means you have to do you have to go through the process of generating invoice to make payment. And in addition, you are going to pay education tax. So after that, you can now request for your TCC. Now, in the process of requesting for your TCC, there is what we call desk audit. So they will not just issue you a TCC, they will have to review your filing to see if you are entitled to collect that TCC. At that process, you can do your reconciliation with the FRS, and then agree any fee with for payment. Once you do agree any fee that you are supposed to pay, and then once you make payment, you will be issued your TCC. Just submit filing within 6 months. Already mentioned that. Ensure all corporate taxes are paid, and ensure of remittance is documented. VAT, everything will have been paid before we get to this stage. Retain knowledge, able receipt, and ensure compliance with applicable deadline. So ensure you have you stick with the deadline. Like I mentioned before, 30th of June is the last day for you to file if your accounting year ending was December. For people around September, their filing month is always in March. So 6 months after your financial year end. So the timeline for remittance, of course, 6 months. Penalty for non-appliance, fine and restriction of business. Sometimes they will go as much as pasting their banner in your business, or even closing down your business if you don't comply. Thank you. So questions.
All right. Thank you, everyone, for joining. Thank you, INSICAP, for that insightful session. So right now, we'll be taking questions from everyone. So if you have questions, you can unmute and then ask your question. You can also refer to the chat box and type in your questions there to be read out to the facilitator to take your questions. So you could also take questions from from first speaker too. She's also here to address this question. But it's like we have some questions on the chat box already. So yes, so somebody is asking, Adum is asking, saying, my question is to Mr. Udo. You mentioned that employees are at liberty to pick any pension administrator, such as IBTC. Does this mean that a company can have different pension administrators for its staff members? Did you get that?
Yes, yes, I do. So the employee are at liberty to choose any PFA of their choice. So no company cannot compile you to pick a PFA. You have the liberty to register. And in fact, now it's very easy. If you go online, you can see their form, pick any PFA, and your duty is just to submit what the company needs from you is just to submit your RSA number to the organization, irrespective of the different PFA that you have. The company have every means to pay all the PFA. In fact, in some companies where they have more than 20 PFAs, so they can pay any PFA of your choice, but you are at liberty to choose any PFA.
All right. Thank you. That has been answered. So if you have any question, you can raise up your hand and ask, or use the chat box to ask your questions. So we'll be doing that in like 1 or 2 minutes. So we're giving you a platform, 1 or 2 minutes. You can ask your questions before Isikak leaves.
Good morning.
Oh, good morning. Yes.
My name is Luke Monomota. Please confirm if I'm audible.
Oh, yes, I can hear you. Speak up.
All right. So thank you very much for that very insightful presentation. Though I came in a little late, but I met a substantial part of Mr. Udo's presentation, and my questions will go to him as well. Thank you, Mr. Udo. Please, I would like you to clarify on a few things you talked about, which centered around VAT and withholding tax. So in my organization, we render services to not a few of the commercial banks that we have in Nigeria. In fact, almost all. And it is the practice that they don't remit VAT that we include on their invoice. So we understand that we are supposed to obtain their VAT exemption certificate so that in the future, we do not have the need to include the VAT element on each of their invoices. Please clarify the workings around that. How do they reconcile with FIRS? And how is it that when the tax authorities come in to audit us, they will understand that we subsequently do not charge them VAT? What are the technicalities in reconciling that area? That is one. Two, you also mentioned about when you talked about CIT and company income tax, that if you have a substantial amount as a positive balance on your withholding tax on tax promise, you can use it to offset your CIT remittance. What if in a case you have a part of it, say for instance, you are due to pay, like for instance, an amount of 2 million naira to pay the authorities for your CIT, and you have like 1.5 million naira as your withholding tax balance on the tax promise. Can't you utilize that 1.5 million and do a remittance of an additional 500,000 from your bank account, any of your bank account, through the payment platform, remitter or what have you? Or it just have to be enough? The withholding tax amount or balance that you have on your tax promise has to be enough, sufficient to offset that CIT. I want you to clarify on that. Is it that you have to have the balance that will cover the CIT, or if you have a part of it, if you have it to, I don't know if you get my point. If you have a part of it.
Yes, I do. Yes, I do.
So is it workable? Just left for you to pay the balance. And please don't forget the first question. How do we reconcile with the tax authorities?
Okay, thank you so much. Thank you so much, Omotayo, for that question. So I will start with the second one, and before I go to the first one. So the second one is if you have an amount that does not cover your CIT, can you pay that one and then use your bank account to pay the balance? Of course. Of course, there's a place when you are filing your returns on tax promise. There's a so the withholding tax that you have automatically pop up and ask you a question. Do you want to use the withholding tax to offset your CIT? So you click yes. So if that amount is enough, it would totally move you to the next stage. That's to pay your education tax. That means we know education, you cannot use withholding tax to offset education tax. So it's only education tax you will be paying at that point. But if the amount is not enough, of course, it will show you the balance that you are supposed to pay. And then you proceed and generate an invoice and make that payment. I don't know if that is clear.
Very, very clear. You can proceed to the other question, the earlier one. Thank you.
Okay, so I moved to the first question. The first question was, how do you relate with those
I mean,
companies like
how do you reconcile?
banks
Sorry,
that are
please.
with,
Okay, let me take that. How do you reconcile with the authorities for some of your
yeah,
clients that do not remit VAT to you?
to you,
Yes.
okay.
Only
So,
presenting you with the VAT exemption certificate.
Such situation happens to one of our firm last year. We're audited by the authorities. And what we do at this stage, so what I advise people to do at this point is, of course, that when you are invoicing, you have to put the VAT, because it does not, for them not remitting to you does not mean they are not remitting to the government. So they are remitting to the government, but the government does not want them to pay you to remit. So they are remitting on your behalf. So they withhold it and remit it on your behalf. So it's not the other practice where they pay you to remit. It's this other way that they hold on to the money and remit on your behalf. So it's still going to be in your invoice when invoicing. Now, for you as a finance person or the person taking custody of this, your duty is to have a record of every VAT that has been held by them. So at every interval, you can send an email for them to share with you the remittance receipt. That's your own copy. I have mine to date. So once you share that email with them, of course, the bank remits. So they will share you the payment receipt for all the VAT they have paid in your behalf, so that when the authorities comes for audit, you can present that. The
All right,
only
please.
one I know they don't
Can I
share.
interrupt you a bit, please?
Okay.
While your explanation is very, very clear, how about government establishments?
Government establishment is not entitled to VAT, to pay VAT. So you don't
I know. Do
include
they
it in
still
your.
they will not remit to anybody because they are also the
Yeah,
VAT.
they are not entitled to. Yeah.
So how do we get copies of evidence or any form of evidence to show that indeed these VAT were not remitted to us, so that by the time tax authorities comes calling, we will have something to show them that these were not received because they are from government establishment, or automatically they would know. Please clarify on that.
Okay, so there are sectors that are VAT exemption. So you can get a document from them. They have a registered document that shows that they are VAT exemption. So you can have it with you. So if the authority comes, the responsibility for you is to submit the invoices that you have submit to that organization. You understand? So you submit the
Yes, please.
invoices, of course, because they are VAT exemption. You have the copy of their registration, which show that they are VAT exemption. So once you do that, automatically that revenue, the authorities won't charge you for that VAT. They will just deduct it from your total revenue and charge for the rest, and audit you for the other revenues that are VATable.
Thank you so much. It's clear. Thank you.
Yeah. For that question. Okay. I'm seeing. Oh, okay. All right. So, any other question before we wrap up? Any other question? Any question for Udo, Mr. Kakudo? Any question? Any question? Any question? You can use the chat box if you have questions. If not, we'll be moving forward. All right. Thank you everyone for your time. I'm sure you took one or two things away from this webinar, and then you can, and to help you your like everyday statutory. Okay, there's a question. Oh, a question, please. Omotolani Fashino.
Okay.
All right. Ask your question, Omotolani.
Yes. So I want to know, from the presentation by Mr. Nsikak, he mentioned that you remit at the place of residence of your employees, right? So now, assuming that you have at the state of residence of your employees, now assuming that you have like maybe because you do work in different states, your main office is here in Lagos, but you have one or two employees in different states. Is there no other way to pay their taxes without having to register with each and every Inland Revenue Service in each of these states?
Thank you. There is no other way. You have to register with the State Internal Revenue Service. As far as your company is registered with CAC, you have the right to register with as many states as possible. So you have to register with that state authority. Without registering, you can, of course, you can't pay.
Can the employee pay by themselves?
If the employee can pay, if I think what it apply is if the employee wants to pay, they have to do self-assessment. Self-assessment. There's a plan. There's an avenue for you to be able to do a self-assessment. Then you put in all your income for the year, generate and make payment by yourself using, of course, the employee would have registered with the state's Internal Revenue Service and then have a TIN. Because if without a TIN, definitely you can't remit because the remission is always tied to your TIN. So employee can register and remit on their behalf if the company does not want to go through the stress of trying to register across all states Internal Revenue Service.
Okay, thank you.
Okay.
All right. Thank you for that question. Thank you for that question. So I guess that would be the last question. So please, you can just refer to the chat box. We sent you a link to our social media pages, so kindly follow us on Instagram, on Facebook, on X, and on yes. So please just use the link to follow us. Also, please check. There's a link to give us a feedback. Your feedback is very, very, very important to us. So just use the link to access the feedback form and fill. We are pleased to have every one of you, and we hope to see you in our next webinar, our next edition of our webinar. All right, thank you, everyone. So please, before you log out, fill the form, and once you've done that, just type on the chat box that yes, you filled the form. When will the recording be? Okay, yes, so you will get the recording at the end of maybe by tomorrow evening, by close of business tomorrow, you should get the recording, the slide, and the slide. So please fill the form. Once you fill it, just type in on the chat box here that you fill the form, and then you can log off. Thank you, everyone. Thank you for your time. It was nice having you all. So please don't forget, and check the chat box, click on the link. Yes, thank you, Sochima. Yes, fill the form. We need that feedback. Your feedback is very, very, very important to us. Anything, thank you. Thank you for filling the form. All right, please fill the form. and then you can log out. Thank you. Oh, yes, okay. Thank you, thank you. Thank you, Gochuku. Thank you, Gochuku. Thank you, Gochuku. Because I need more coming. Your feedback is important to us, so yeah. Oh, where's the link? Okay, I'm going to paste it again in case you missed it. Oh yes, Emmanuel, thank you for filling the form. I'm going to share the link again. Okay, please hold on. Oh yeah, thank you for the feedback. Thank you, Fagbemi Rachel. Thank you. Okay, I'm dropping the link again. All right, so yeah, thank you. Akina Detemtokwe, thank you for filling the form. Yeah, Adebo Alekoka, thank you for filling the form. Thank you. Aminat Sagbaje, thank you for filling. Peace, thank you for filling. Please, I need more coming. Keep it coming. Keep it coming. So we still have 51 people on the call. I want to believe that 51 people have not filled the form yet. So please, after filling the form, you can log out. Thank you, Peace. Thank you, Aminat. Thank you, Adibowale Koka. Thank you. Thank you, Bukola Nuruddin. Thank you. Thank you, Dorcas. Thank you, Dorcas. Thank you, Dorcas. All right, so we still have 45 people on the call. Please use the link to give us a feedback on the session, on the webinar. Favor, Marika, thank you. David, thank you. Thank you, thank you, thank you. So we need as many feedbacks as possible. Oh, thank you, Anna. Thank you, Fagbemi Rachel. Yes, thank you, Samuel. Thank you, Violet. Thank you. Yeah, Adewumi, thank you for filling the form. Thank you for filling the form. So in case you missed out, I'm going to paste it again. I'm pasting the link again for the form. All right, thank you, thank you. Oh, Wisdom, thank you. Thank you.